What's going on, everyone? If you're new, welcome. And if you're not, welcome back. Looking here at the markets, we see the S&P is so far holding this trend line support, which just comes in the middle of this channel of the resistance and support that it has been trading within, going all the way back and starting in the early April of this year. And although we tried to peek out of that trend line once, of this trend channel once over here to the upside early in June, the June was the high point up until last week. We took out June highs. So far have pulled back into that first area of support. There's further support below. Continue looking to buy any resumptions of price resuming out of this pullback, targeting next 33.20 here on the S&P 500. It remains a US dollar story, and the dollar is selling off this week. Look at this over here. This is seeing a real breakdown of the US dollar right now, and we are looking at possibly further losses here in the near term on the US dollar before there's any type of relief rally. It seems to me right now we've had some violent turnarounds intraday during the London session where you were starting to see overnight some dollar strength. And then usually before New York gets to work, you're seeing that really a sharp selling of dollars. And you're seeing the DXY here trading down towards 94.40. You see it taking out the March low over here, right? And now it's targeting lower, probably 94 next. That is driving precious metals higher. You see gold right now on the verge of breaking out to new all-time highs, or now that it's hit this circle over here, at some point in this area, we're now looking for a pullback on gold. If you go back and you look at what happened during the crisis, right, you saw a huge pullback on gold of 14% during the crisis. Are you going to see another 14% pullback right now in this bull market? No, I don't think so. What about this area over here of supply we have? That's about a 9% pullback. That would be a gift. I think that you have to also look perhaps any 5 to 7% pullback. Begin your accumulation strategy here as you resume off there. Gold should be pulling back sometime in this bubble over here as it goes on to new all-time highs. What does that mean for silver? Silver has been beautiful all week, and now you can see it's consolidating. Very nice over here. Let's even look on the 12-hour. That's beautiful right there, because as you make the impulse up, you have to be long. Silver could be targeting 24.50 on this next impulse over here, or if you start making lower lows, now you could get back out of the trade, minimizing your risk. That's what it's all about. We're seeing Bitcoin here. It looks like it's making a move over the weekend, perhaps. The trend line coming in at 9,800. That's actually the trend line of trend lines. Above that trend line, the bull market has officially begun, and that will be a really nice moment. Ethereum continues to outperform all week. It's been fantastic, as have other altcoins. And really, let's talk about the dollar over here, and let's talk about the euro and this trade that we've been in. Oh, I just deleted something that I don't want deleted. That was an important trend line. That's the trend line over here that I just deleted. That's the trend line we took this trade off of, right? This is the trend line that we've taken this trade off of over here. I got in right over here. Beautiful. Still holding this trade. Have not taken profits. And why should I? There's been no reason to get out of this trade. Targeting the upper trend line of resistance over here. By the way, this trend line over here that you're looking at that we just broke out of, going back 12 years to the last crisis over here when QE started, look at that. Wow. Are we going to be rejected over here? Is that where the dollar strength comes back? We'll be watching that level. I'm taking profit into that level personally, but if we break out from there, if we break this trend line over here, the outer resistance, that could lead to a bigger, more sustained move against the dollar. The euro has been a good place to play it. The pound is pretty good also. The euro has been really one of the best places to play that weak dollar. We that's why we're there. We've been working towards that, and what we figured was going to be the best play if the dollar broke down out of this channel that it was in over here. This is what led right over here. We were in this channel for months, right? The break of that channel up, that's where we became very bearish on the dollar. And you could see that break, that famous entry we use right here. The break of support, the retest, confirming it as resistance. And then as it resumes over, right there, you get short. And that has been a very good trade, and that continues the direction of the market. It is the dollar moving the markets. I'm seeing, I think, what is a normal retrace here, very normal retrace right here on the equity markets. I don't think it's the start of anything bigger by any means. We'll keep tracking it. We'll keep watching it. All right, let's take a look around. We had gold topping 1900 for the first time since 2011. The last resistance in the way of gold is the all-time high. It is just about $20 off the all-time high of 1920. When interest rates are zero or near zero, then gold is an attractive medium to have because you don't have to worry about not getting interest on your gold. And you see the gold price will rise as uncertainty in the markets are rising. Now, I would be buying now and continue to buy because gold really is on a run. It's doing well. Should be that way for some time to come. You're looking over here when we talk about the real driver. You can see gold tracking negative interest rates, which is only a trend that's increasing worldwide. This is actually a better look at, what was this over here? This was the fall in real US yields have pushed gold to near record high. And then over here, you're looking as gold continues to track the volume of the negative yielding debt. Boom, there it is. Now, again, there's a look at that perfect cup we're looking at on spot gold as we come into the all-time high. I'm looking for a pullback as we go ahead and either from this portion on as we approach the all-time high, and or if we make one up into maybe around 2000, that could see a sharp pullback on gold. What would that be? A 5% pullback on gold would be a really nice opportunity to lean in to buy. I don't know if we'll get much more than that, but we'll see if we get a handle now, if a handle develops for that cup and handle. And if we do, hopefully as we come in, you know, as we start making that turn of the candle, the bottom of the handle, that's hopefully where most people position in now. Over here, silver continuing to consolidate at or near its high over here. When I say high, a yearly high, this is a high of 8 years now we're looking at on silver. Gold going on an 11-year high, and you can see the consolidation looks really nice. This could go up to 2450 on this current little impulse we're experiencing over here. And then you see the gold to silver ratio creeping higher again. This looks like a pullback. It looks like it's going to resume out towards silver's direction, in my opinion. A little closer look at that gold to silver ratio. You're looking at the inverse. Here you're looking at the silver to gold ratio. So that's an inverse. You could see this little channel over here that silver is attempting right now, attempting to break out. So we could see, as I was just talking about, some further downside appreciation towards the side of silver. You could see that breakout occurring right there. And take another look at it. Here's a channel that this is in going back to 1991 during the crisis. Where's the 2008 crisis? It was down over here. That sent us in the next few years up towards the top of the channel. Here we are now testing the bottom of the channel. This was the gold. The gold to silver ratio is at all-time highs over here. And since sharply reversing, we look at the last time QE started, the last crisis, it was an upward parabolic move in silver. Are we going to see more of that? And is that looks like everything is setting up that way? It's all a dollar story. And what you're looking at over here, as you're seeing precious metals sharply appreciating versus the US dollar, they continue versus all fiat currencies. Here you can see the dollar coming down and testing this important trend line over here right now. If this trend line does break, this could be an intermediate term on the dollar. We could see a sustaining further downside move on the US dollar. We'll be watching it. We'll be tracking you through it all. Here we are right now looking at this chart. This is the Nasdaq during the dot-com bust. I keep telling people that we're not going parabolic, and they're like, we're going parabolic, right? So I pointed out how this over here, this little pattern, this deep pullback, and then to the area where the first red dot appears. Now the red dots is when the Nasdaq was up more than 2% to a new 52-week high, but fewer than 53% of the stocks on our index are rising that day, which means you had just a few darlings making all the gains, right? This is the first red dot. Picture this in your mind. This is little down, up to red dot. Little down, up to the red dot. Now this was just by the way, what happened over here? This was the dot-com bubble, right? Easy Fed monetary policy leading to this bubble. And here is the first time the Nasdaq was up 2%, why 53% or more of the stocks did not rise that day. You see this consolidation period over here that kept happening, volatility. This is the breakout. Remember this pattern, this is parabolic, right? Now, picture this valley over here, by the way. Picture that valley over here. And then picture this one over here. All right, notice the higher low. This one over here, notice the higher low. Notice the valley, notice the valley, notice the higher low, notice the higher, it's the same pattern. And then over here, up until the red dot, over here, up into the red dot. Watch what Derek did over here. He took 89 through 2002, and he just moved that over to here, where it starts at number 1. Now, remember, I was asking you to look at that valley, to the red dot, to the red dot. He actually has it where he started it, it puts the red dots at the same place. So that's cool, right? And you can see over here, they lined up perfectly. And over here at number 3, they lined up perfectly. You had the same little valley in number 2. So, where he's got it lined up, we're in perfect sync. I just also noticed that valley, right? That valley, that valley, that valley. So, and then he has a cleaner chart over here. There it is. Yeah, after he moved it over, that's what they looked like. So here's where we are today, right? There's where we were in this fractal back, 2 years before the dot-com bubble really blew. Is that 2 years? Let's get that exact. Yeah, 1999 we'll call it. This is the real run-up. We haven't even gotten towards the phase of the real run-up yet. Just according to this fractal, invest off that? No. Pay attention? Yeah. By the way, what's going on over here is that the Fed started QE. The Fed started QE. All right. So, by the way, and pay attention to where you're at.